The Federal Reserve of the United States has been in the news a lot lately. I continue to see news headline after news headline about all of the reports about not only the Federal Reserve, but about how the Federal Reserve is essentially not telling you the truth. The Federal Reserve is lying to you about inflation and about what inflation means for our economy. And that is a major claim, and one that we should definitely not take lightly. So today I want to talk all about the Federal Reserve and whether or not the Federal Reserve is actually lying to you about inflation. So you may want to stick around till the very end of this video because the answer might shock you. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, make sure to smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. The Federal Reserve of the United States is in charge of the money supply in the United States. They make sure that we have enough money and there's enough money in circulation to, one, fund bills, but also for Americans to have. Every single year, the Federal Reserve decides how much money should be printed in the United States. They also track and research things like inflation and track how much money we have in circulation. They're basically in charge of the money of the United States. And what you're probably wondering is, well, isn't that the Treasury's job? Yes, so there is an important distinction between the Treasury Department of the United States and the Federal Reserve. The biggest distinction is the Federal Reserve is not actually a federal entity of the United States. It's a private organization. Essentially, the Federal Reserve decides how much money should be printed in the United States, and then they send that information along to the Treasury Department. The Treasury Department is the only entity that can issue and print money in the United States. So the Federal Reserve doesn't actually print the money, but they get the say in how much is actually printed. Federal Reserve and the Treasury Department work very closely to track and monitor the money supply of the United States. This is important because typically we want inflation to be at a pretty low level. Inflation, of course, is the steady rise in the price of goods and services over time. Normally, inflation is around 2 to 3%, but as of October of 2021, inflation hit a 31-year high at around 6.2%. And the Federal Reserve is a private entity because it's supposed to separate the actual monetary policy and the money printing from the United States. There may be a little bit of a conflict of interest if the Treasury Department is making policies and then also printing money. So to kind of balance that, we have the Federal Reserve, which actually says how much money we should print, and then we have the Treasury Department that kind of makes the monetary policy and kind of oversees the circulation of money throughout our economy. The Federal Reserve is supposed to have Americans' best interest in mind. It's supposed to have our economy's best interest in mind. However, over the last 2 years, the Federal Reserve has been in the news a lot because they have printed around $2 to $5 trillion in stimulus to help out in the Paycheck Protection Program, to help out in the unemployment crisis, and to help out Wall Street by buying billions of dollars every single month in bonds and treasury notes. All of this was to help pump up our economy and keep it from collapsing. If you remember back in 2020, the world was put on lockdown. There were so many industries that had to completely stop. When all of these industries stopped, that means that people, sometimes millions of people, were furloughed or laid off or sometimes even fired. The bottom line is a lot of people weren't making any money. And if people aren't making money in our economy, that means people aren't spending money. And if people aren't spending money, well, then the economy is going to collapse because even businesses don't have money to pay the people that they currently have. So the Federal Reserve decided to step in and essentially give out trillions of dollars in stimulus. This was free money for a lot of people. You didn't have to do anything to get a stimulus check. And America's finances were definitely pumped up in 2020. Around 50% of people went out and spent these stimulus checks about a week after they received them. More money was circulating throughout the economy and our money supply was going way up. To be fair though, there was a great deal of people that went out and invested this money. We saw some of the biggest booms in first-time investors that we've ever seen in the history of the stock market. And saving rates hit all-time highs as well. People were saving a lot of this money too. So it's not like everybody was spending it, but just a good portion were spending it. And like I said, for a time, at least financially, things were going great. People had this access of money, so they were going out and spending this money. In the meantime, though, every single dollar that was being printed was devaluing all of the current dollars that are in circulation and future ones. This is because the more money that people have, the more money that they can go out and spend. That means they're going to naturally buy more things. If they're buying more things, that means companies have to produce more products. And in general, companies are going to have to pay more if they have to produce more. And that's not free, which means all of those costs are going to be trickled down to the consumer. Companies are going to need to find new ways to make money, and the easiest way to do that is to raise prices. So even though you could buy a lot in the beginning, the buying power of your dollars has started to slowly decrease. This means that even though products and services haven't really changed, you can't buy all of the same things with the same amount of money anymore. And that was just in the stimulus programs of 2020 and in parts of 2021. Recently, President Joe Biden signed into law the infrastructure program, and this is valued at over $1.2 trillion. And as many of us know, Congress and our government doesn't usually stick to its budgets very well, so it's likely that the government is going to have to print more in order to afford this program. That is all speculation though. There is a possibility that the federal government will stick to the $1.2 trillion that it agreed on. However, this is unlikely. But that is another $1 trillion that needs to be printed and now circulated throughout our economy, which means inflation naturally is going to go up from there. Now, on the flip side, I like to believe that the people who are in charge of the Federal Reserve and our federal government know what they're doing. So if this is the case, then why would they allow all of this money printing to be done if inflation is just going to continue to ramp up? Well, the answer is simple. The Federal Reserve needs inflation, and they need it to continue to rise. Remember what I said about when each dollar is printed? That means the value of current dollars starts to go down. Well, this actually works out great for the federal government. And actually, it works out great for anyone that has a loan with a fixed interest rate. As many of us know, the United States government is in debt, around $29 trillion in debt to be exact. So let's play with a hypothetical here for a second. If inflation didn't exist and the value of our dollars actually started to go up every single year, just naturally, well, then this would mean that every single bill that the federal government takes on would now cost more and more to pay off. And at some point, the government would absolutely crumble because all of this debt that it's taking on is just getting even more valuable. However, this doesn't really happen because as our currency is devalued, all of the debt that is taken on by the federal government now becomes cheaper and easier to pay off. Say the federal government takes out a loan that is worth $1. If our currency is devalued by 50% within the next 10 years, that means that original loan is now only worth around 50 cents. Money is now getting cheaper, and that means the ability to pay off that money is getting cheaper too. So inflation is actually a really good thing for the federal government. It allows them to pay their bills with cheaper dollars. Also, inflation can be a really good thing if you have a loan with a fixed interest amount. And it works the exact same way. If you take on, say, a mortgage or a car loan that has a fixed interest amount, that means you're going to be paying the exact same amount on your mortgage every single month for the lifetime of the loan. That means if, say, your mortgage is $500 in today's money, in 30 years from now, $500 isn't going to be worth that much. That means you're actually not spending all that much in order to pay that mortgage. Money went down in value, so while you're actually still paying the exact same amount, the money is less valuable and the buying power of it is decreased as well. So now we get into the root of what Michael Burry and some other experts have been talking about. The Federal Reserve needs inflation. And lately they have talked time and time again about how inflation is transitory. So is Michael Burry right? Is the Federal Reserve lying to you about inflation and your money? Well, things start to hit a little bit of a gray area about the term lying. The Federal Reserve is in a position where they don't want to cause panic amongst the American people. So what they're doing right now is telling people that it's transitory, that eventually it will go away. And if you think about it, what else is the Federal Reserve and the federal government supposed to do in this situation? On one hand, if they tell you the truth and they say, inflation is not going away. It is a bigger problem than we thought, and it's here to stay. And what do you think would happen? That would mean that the Federal Reserve is going to cause panic amongst the American people. That might literally crash the stock market because thousands of investors are going to pull their money out. That could hurt 401k programs because a lot of them are tied to Wall Street. And a lot of people are going to start saving their money. They're not going to be spending their money, which could put our economy in collapse. So on the flip side, the Federal Reserve has decided to take a more reserved and cautious stance on inflation. They are saying that it's transitory because they don't want to scare the American people. And what does transitory mean? It means that it's temporary. The Federal Reserve right now has admitted that inflation is a lot higher than even they thought it would be at this point in 2021 and in 2022. However, they believe that the inflation is being caused by our supply chain issues. Last year when everything closed, that means industries closed, which means everything got backed up and companies couldn't produce anything. That kind of bottlenecked until we reached our supply chain issues of today. Oh, and millions of people were getting stimulus checks and money from other sources, so they were buying a lot more. Demand was way up here, but the supply of everything was super low, and that's currently happening today. So the Federal Reserve is saying that all of this inflation is simply just transitory. Once these supply chain issues are resolved, then inflation is basically just going to go away. However, the Federal Reserve is in an extremely tough position here, because who do you think that inflation hurts the most? Inflation hurts the most financially uneducated and the vast majority of regular Americans. This is because the average price of goods and services is going to go up. And the average American does not have the financial education in order to combat inflation effectively. So the Federal Reserve continues to say that inflation is transitory. That way the American people don't panic and the average person continues to save, spend, and invest without a care in the world. However, all of this money printing, though, will eventually start affecting our economy. Anytime the federal government and the Federal Reserve prints money, that means the money supply is going up. Anytime they do that, you're going to face inflation. Now, typically, inflation is only around the 2 to 3% mark. We've seen high inflation before in the United States, though. Back in the 70s and 80s, inflation was sometimes around the 13% mark. That's more than double what it is right now. So while the Federal Reserve is right in saying that, yes, these supply chain issues are causing a lot of the inflation right now because we're having a power struggle between supply and demand, eventually, all of this money printing is going to catch up to Americans. And at the end of the day, you are going to end up paying for it. Remember, nothing is free. So is the Federal Reserve actually lying to you? Well, I'll say this. They're definitely not telling you the whole truth. People in our federal government are smart. They understand how the economy works and they want to keep it going. They have a vested interest in the economy. All administrations and the Federal Reserve have a vested interest in the economy. No president, no Federal Reserve chairman wants to see the economy fail. This is why we saw a lot of the money printing in 2020. Say what you will about these corporations who did not have enough cash on hand in order to get out of the pandemic. Say what you will about the people who had $0 in saving. The bottom line is people didn't have money. And if people don't have money, then the economy is ultimately going to fail. The Federal Reserve and the federal government does not want to see that happen. Because if they do, think about the political ramifications of that. So if President Joe Biden and the Federal Reserve says, we are going to let the economy fail, there is not enough saving in our economy, and a lot of these big businesses need to crumble because they are bad with their finances. What do you think will happen? The vast majority of Americans will say, great! Down with the corporations. We don't care if they fail. On the flip side, though, our economy is going to crumble. That means millions of people are going to be out of a job, and that means that the administration and the chairman are probably going to get the boot. So administration after administration and Federal Reserve Chairman after Federal Reserve Chairman continue to pump up the economy when we have these issues. And again, the Federal Reserve prints all this money, but at the end of the day, you are the one that pays for it. This is why it is so important in today's economy to be financially educated. That way, when inflation is reaching record highs, you know how to protect yourself and you know how to make money that beats inflation. And the bigger question here is how much is too much? Sure, the Federal Reserve and the United States government has printed trillions of dollars. They've also taken on around $29 trillion in debt. And so far, nothing has really happened. However, how long can that actually last for? We've talked a lot about on this channel how nothing can last forever. So it's not crazy to think that all of this money printing and taking on trillions of dollars in debt will eventually catch up to the United States government and the US taxpayer. Right now, inflation is at record highs, but we still haven't reached a period of hyperinflation yet. This would be something that would eventually lead to the downfall of the dollar and the United States in general. And to be fair, nobody really knows how long this can last for. It could last for another year, it could last for another 100 years. It's really not clear. But the bottom line here is this. The Federal Reserve knows what it's doing when it comes to inflation and money printing. It also knows that in order to keep the vast majority of the economy afloat, it's going to have to print a large amount of money this time, and you will end up paying for that in the long run. The Federal Reserve does not want to scare people by saying that inflation is a huge problem right now. They want to keep people calm so that way people continue to spend money. They also need to step in if they need to in order for the economy to not crumble. This is a political move, but also a move that keeps our economy running. So the next time the Federal Reserve has a key inflation meeting or just a key meeting in general where they talk about money and the money supply in the United States, you need to read between the lines. You need to financially educate yourself so you can understand what is really going on. The Federal Reserve is not going to tell you exactly what is going on. You have to look outside of what they're saying and make up your mind from that. And this idea is probably not going away. The Federal Reserve will continue to be careful about how it phrases inflation and money for the foreseeable future. And just because the Federal Reserve doesn't technically lie to you, that doesn't mean that you need to believe everything that they say. But now I want to hear from you on this issue. Do you think that the Federal Reserve is lying to us about inflation? And is inflation really transitory? Or is the Federal Reserve actually telling the truth and being completely honest with the American people about inflation right now? On the flip side, what do you think about all of the money printing that the Federal Reserve has done over the last year or so? Do you think that it was necessary to keep the economy afloat? Or do you think that they should have let people and businesses fail that didn't have the financial means and set for an emergency? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.